stabilizes after Brexit negotiations kicked in yesterday. And with Secretary Powell as our new Fed chair, how is his hawkish stance going to affect our markets tomorrow at the new Fed meeting? We'll talk about it here at Capital Markets. Traders, welcome back guys to Capital Markets. I'm your host Cleveland Bishop, and this is where we give you guys the fundamental and technical data every single week. So make sure you guys are subscribed, and of course, as always, if you guys have any questions, shoot them down in the comment section below and I'll be right there for you. Yesterday we finally saw pound stabilize after seeing a massive run from that Sunday session, and seeing markets stabilize at this price area gives us an idea that, hey, there might be another run. Pound has yet to get back up into where it was pre-Brexit, but it's getting close. Pound trading right now in the $1.39s, $1.40s. We would need to see that pound back up into the $1.45s to basically say, hey, Brexit completely washed out of the market, and now we're looking at pound based on growth and inflation, not the looming concerns over how trade and how the different deficits happening across the border are going to affect this UK overall. Okay, so that's going to be pretty interesting, and throughout this week I think we do have a pound CPI coming out. That's going to be some pretty massive data releases that's going to give investors either confidence to start putting capital back into the GBP or pulling it back out. Inflation's been something that's been pretty hard hit across the board, but GBP is the top country here in the G10 that's been performing pretty well. Hopefully we can see another good run, giving more strength back over to the pound, maybe seeing markets trade higher. The big news of the week is going to definitely come in from tomorrow with the US and the massive Fed meeting that is going to be happening pretty much all day from the beginning of that New York session all the way up until around 4 o'clock. Powell, who is now stepping in as the new Fed chair, replacing Janet Yellen, is going to be talking about inflation and all the growth projections that we're going to see all the way up into 2020. Okay, so you want to make sure you're here assessing these markets. Yesterday we mentioned that, hey, we might see a pullback in this US dollar. The Euro USD traded quite low, all the way down into the $1.22 flats, and now we saw a massive run back up into structure for that Euro USD, and subsequently after that we're seeing markets price in, again, that rate hike coming back in. So it was interesting to see market participants liquidate at that low, and now seeing markets pull back down in the structure. Are we going to break this low that we've been sitting at here, honestly, for the past 4 or 5 weeks? Okay, this will be close to the 2018 low, bringing us down to potential new targets, maybe around the $1.20 level. Again, you guys will be able to see that this Fed meeting is going to have massive implications, and if you're on the right side of these markets, there's definitely a profit potential to be had. Now, remember folks, CPI and retail sales, we're getting some conflicting numbers. CPI came in the basically at break even, and retail sales actually came in the red, a little bit under expectations, and that's 2 months in a row. In the past 4 months, 3 of those months have been in the red for retail sales. What is that going to do for the Fed, and how is Powell going to take that information and use that to basically give projections when it comes to monetary policy? We have 3 rate hikes looming, 90% chance of a rate hike tomorrow. Are we going to see those other 2 rate hikes come in, and potentially will we see a price in of another rate hike? We do have some members of the Fed that are looking to see 4 rate hikes this year. That is pretty interesting. Some with 3, some with 4. That, again, that conflicting data is going to have markets sitting on their toes for the next few rate hikes, basically saying, hey, we may not be able to price in these rate hikes on this US dollar until we have a conclusion as to, are we going to do 3 rate hikes or 4? Now, the people who are doing 4 rate hikes definitely are your more hawkish Fed members, but even the most dovish Fed members want 3 hikes. The US economy could push ahead and see 4 rate hikes as the market keeps improving and as that S&P 500 keeps trading higher. And lastly, make sure you guys are subscribed. This week there's not too much data coming out for the euro, but there is a decent amount of euro fundamentals coming out next week that we will be touching base on, so make sure you guys are subscribed. Remember traders, when you're trading these markets, you want to look at it from a technical view and a fundamental perspective. Okay, the fundamental perspective is going to give you that directional bias, while the technical perspective is going to give you that accuracy, right? It's going to help you understand and rationalize the entry, the exit, and the take profit. Okay, if you head over to Capital Markets, we're one of the best brokers in the industry with some of the tightest spreads, and we route from some of the best liquidity providers. Head over to capital-markets.com to get involved and to get inside and start opening up an account so you can trade actively in these markets as well. If you guys have any questions, please comment down below. I'll be right there for you. I'm Cleveland Bishop with Capital Markets. Talk to you tomorrow.